Hi there, welcome to my channel. Thank you for subscribing to this channel, and if you're yet to subscribe, do subscribe. Click on the subscribe button and click on the bell so you get the notifications as they come. My name is Gloria Adeoye. I'm the Pips Grammar Chick and the creator of the 17-part video course titled Trades to Profit. In the previous video, I talked about doing this session, teaching you the basics of trading the harmonic pattern as a way of thanking you for subscribing to our channel and helping us hit the over 100 subscribers mark. Now, the whole aim or the goal of this channel is to provide profitable trading education to Forex traders and also to help those who are brand new to the market who are looking to begin a journey in trading Forex start right. That's the whole aim. That's our mandate. That's our hallmark. That's the whole reason why we're here at Pips Cassa, to teach you the profitable strategies to help you achieve a Forex goal. So today, I'm going to be talking about the basics of trading the harmonic pattern. Now, one of the things that you need to know about trading the harmonic pattern is that it is a reversal pattern. Although it's a geometrical market structure, but it is also seen as a reversal pattern. In your journey trading market structure, you would have come across trading reversals. You've learned about the head and shoulder reversal patterns. You've learned about the M's and W's reversal patterns, etc. for those who are already trading advanced strategies. And you've also heard a thing or two about the harmonic pattern. Sometimes you don't really know how to go about spotting the harmonic pattern or even how to trade it. So this video is to help you understand the basics of trading harmonic pattern. So the first thing you want to do about trading harmonic pattern is for you to understand or know your way around the Fibonacci. You want to know how to use the fib properly. So if you're good with using the Fibonacci, then trading the harmonic pattern would not be a problem, right? If you don't know how to use the Fibonacci, in one of my videos or in my subsequent video, I will talk about how you can use the Fibonacci retracement tool to trade. But today we're just going to talk about using it to map out your harmonic pattern. Now, the harmonic pattern is also known as the XABCD pattern. Like I said, it is a geometrical pattern that signals reversal. Now, as with every reversal pattern, there are two types. We have the bullish harmonic pattern and we have the bearish harmonic pattern. In my 17-part video, in one of the lessons, I think lesson 11 and 12, I talk extensively. I give a detailed teaching on harmonic pattern, how you can spot it, how you can draw it, and how you can trade it. This video, in order not to make it long, is just going to be walking you through the basics of harmonic pattern. So there are two types. We have the bullish harmonic pattern and we have the bearish harmonic pattern. All right, so the bullish harmonic pattern, as with everything else, signals a bullish reversal. So most times you look to see them at major levels of support, all right, while the bearish harmonic patterns signals bearish reversals, and you look to see them at major level of resistance. So technically speaking, you look for bullish harmonic patterns at demand zones, and you look for bearish harmonic patterns at supply zones. Now, harmonic patterns can be found on any time frame. You could see them on the 15 minutes time frame, on the 30 minutes time frame, the 1 hour time frame, even on the monthly time frame. You can see them on any time frame. Now, once seen on these time frames, they signal reversals. Now, if you see a harmonic pattern on a higher time frame, say a monthly time frame, for example, or even a daily time frame, they are more reliable. Why is that? Because they tend to give you that clear market reversal. As you can see on gold right here, this is gold on a daily time frame, right? Now here is a harmonic pattern on the daily time frame. This is a bearish harmonic pattern, and then next to the harmonic pattern we're seeing another reversal pattern, which is what? A head and shoulder. So that's pretty much giving us two confirmations that the gold sell at this zone is ripe for the taking. So that'll pretty much go to concretize our bias to sell gold. All right, so gold is at a major level, a major sell zone or a major supply zone, and next to it we're seeing two reversal patterns. We're seeing the bearish harmonic pattern and we're seeing the bearish head and shoulder pattern. So that's pretty much helped us create a bias, like concretize our reason to want to sell gold at this zone. right? So having known that there are two types of harmonic patterns, the bullish harmonic patterns and the bearish harmonic patterns, and that harmonic patterns signal reversals, what's the next thing you need to know about harmonic pattern, and how can you spot them? So first off, what's the next thing you need to know about harmonic patterns? Now, the harmonic patterns are of different types. We have the bat pattern, we have the cipher pattern, we have the butterfly and crab patterns, and we also have the godly pattern, the shark pattern, etc. So these patterns all have their individual coordinates. Let me use that word. They all have their individual coordinates as far as using the Fibonacci goes. So when you pull out the Fibonacci, there is a formula to being able to decide whether this is a bat pattern, or whether this is a cipher pattern, or whether this is a godly pattern. Because each of these patterns, the reason why you want to know them is because each of these patterns have their different entry levels. You know, some people just go on their chart and draw harmonic patterns just because they want to impress their friends. But the truth of the matter is that this is not to impress. This is for you to see key levels to trade from. That's the whole essence of knowing how to trade the harmonic pattern. Not just because anybody can just pick this up, because on your TradingView application, you can see it here as XABCD pattern. You can see the cipher pattern written as just cipher, right? So anybody can just pick this up and just, you know, see something like that and just draw it out and call it a harmonic pattern. But the truth is, there are rules to trading this pattern. There are rules to trading them, and these rules need to be followed. That's the reason why you have them in different types. The bat pattern has a distinct entry level. The cipher pattern has its distinct entry level. The shark pattern, the butterfly and crab, these patterns, they all have their entry levels. So you want to know the entry levels of these patterns by knowing their coordinates. But the general formula of trading the harmonic pattern is this. I'm going to type it out so that you could write it down and learn something from this channel today. Like I said, we're all about the education, right? We're all about the education. We're all about helping you trade, or helping you better your trading game, helping you scale it, helping you profit. That's all we're all about. We're all about the Forex education. So remember, if you're struggling to make a profit, don't forget to pick our 17-part video course, because this course will actually help you to trade to profit. So send us an email at winningwithforex 2.0 to find out more about the course. winningwithforex 2.0@gmail.com to find out more about the course and get started on your Forex journey, because you need to invest in this journey. You need to invest in your education for you to be better at this game, alright? You don't come in here hoping to get lucky. That doesn't happen. You come in here with strategy, you come in here with skill, you come in here with a good mindset to profit. So what's the general formula to trade the harmonic pattern? Like I said, it is called the XABCD pattern, right? So the general formula is that for the X, which is seen as the support level, all right, for the X to B zone, when you take the Fibonacci, it should give you a B level. Sorry, from the X to A zone, when you take the Fibonacci, it should give you a B level that ranges between the 38.2 to the 88.6 level. So that's just a formula of trading the harmonic pattern. So you want to see your fib, when you take the fib from the X level to the A level, you want to see a B retracement level. So that B level is seen as the retracement. You know, normally when price moves, right, moves in a particular direction, say it peaks up, there tends to be a little retracement. So that retracement level is seen as the B zone. So that B zone should fall within the Fibonacci level of 38.2 to 88.6. So that's just formula 1. Now the next formula is that you want to see that there is a level that also creates another leg, which is called the C leg. So for you to be able to spot that level, the formula is that you want to take your fib from A to B, and you want to see a Fibonacci retracement or continuative pattern, which will give you the C at the levels 38.2 to 133.2. So you want to see that 38.2 to 133.2, or some people even stop at 127.2. Why? Because 127.2 is a cycle pattern. An extension of it will now begin to give you other patterns like the shock and all that. But 127.2, you don't want to see go beyond that. You don't want to see that 144. You don't want to see that 161.8. You just want to see it within that range of 127.2 or 133.8. Right, that's just a range where you want to see that B continuative move. All right, so I'm going to draw it out later. So when you see that X to A give you a B retracement level, you want to see that the level A to B, which is seen as a continuative move, should give you a 38.2 to 127.2 level of continuation, and then the market naturally would dip right at that point. So that point is seen pretty much has to be a resistance level or a support level. So the market dips at that point to give you an entry for the harmonic pattern. So that entry is what we call the D leg. So you want to see a Fibonacci movement of X to A or X to C to give you a D entry level of 78.6 to 161.8. So you see I see that 78.6 to 161.8. all right, so that's the zone. That's the general formula of trading the harmonic pattern. Now why do you want to take note of this range? Because that is where you look to enter the market from. So the bat pattern has its own entry level. The cipher pattern has it. So what I said about entry, so the D leg is your entry. So that range 78.6 covers the different harmonic patterns. So one could have entry at 78.6, another one could have entry at 88.6, another one could have an entry at 127, at 144, at 161.8. So these different harmonic patterns have their different entries also. So this is just the general formula on how you can trade the harmonic pattern. All right, so there's a formula to it, and for you to trade it, you need to know this formula. All right, so like I said, this is just a bonus video. In my 70-part course, I taught this extensively. I broke it down, giving you a step-by-step analysis on how you can trade it. So for you to gain access to it, you want to purchase that course. In the comment section or in the description section, in the description section, there is a link where you click on that will show you like a presentation or a video highlight on how you can go about purchasing this course. When you do that, it will open a phase or a platform for you to purchase a course and begin your educational journey. Remember, you can't come in here without learning. You have to learn it. There is no oversaying it. There's no overthinking it. Now, that's that for the harmonic pattern. The final aspect that we're going to talk about is how you can spot it. Now, harmonic patterns are seen as irregular M's or W's, all right? So it could be an irregular M formation or an irregular W formation. So you begin to look for these irregular M's and W's, then you begin to spot these harmonic patterns. So like I said, in summary, the harmonic patterns, they are geometrical patterns that you see in the market, and they usually signal reversals. All right, so you look to see a bullish harmonic pattern at a demand zone or at a buy reversal zone, or you look to see a bearish harmonic pattern at supply zone or at a sell reversal zone. So these are the places where you look to see the harmonic patterns, and there are different types. We have the bat pattern, the cipher, the Gartley, etc. And the general formula for the harmonic pattern is the X to A to give you the B range of 38.2 to 88.6, the A to B to give you the C range of 38.2 to 127.2, and the X to A or the C to give you a D range where you enter the market from at 78.6 to 171.8. So here right here is the D range, right? So this is a harmonic pattern. This is the entry zone. You can see how price has been playing around the entry zones. Now these patterns are seen to be very profitable. They are self-fulfilling and they do play out. They're one of the high probability patterns that most traders rely on. So I'll encourage you to learn how to trade the market using the harmonic patterns. Thank you very much for watching. Till I see you again in the next video. Don't forget that the goal is not just to trade, but the goal is to trade to profit. Have a good one. Bye bye.